Welcome to your Mortgage Insider Update, July 21st, 1 week before the Federal Reserve kicks off their end of July meeting. We had Consumer Price Index coming in pretty tame last week. Overall inflation remains relatively low, giving the Fed some cover to, there's a case that cutting interest rates in this coming meeting could be warranted, but then the unemployment levels have remained also low. Unemployment claims last week actually dropped slightly. So we trudge along with the economy doing pretty well, employment staying pretty steady. The economy is not being heavily impacted by tariffs, so we are starting to feel a little bit of positivity around interest rates, with rates coming down after coming off some highs of the week before. Let's check it out. So a pretty substantial drop to start this week off with the 10-year Treasury down at 4.35%, 7 basis points, while mortgage-backed securities have improved. We can see a pretty positive move lower, nothing specifically for a Monday to drive interest rates this much down, but just a positive feeling as we get a week before the Federal Reserve meeting. I feel like we are right now hovering just about the 200-day average, a pretty substantial drop coming off of highs of July 15th. So likely to remain somewhere in this area. No major news items this week other than just basic, there are monthly reports. We'll have the unemployment claims back this coming Thursday, which actually was a little bit more positive last week. So a great start to the week as things start to roll over, so to speak. We would love to get ourselves back into these lower levels, but it's likely going to take some major news from the Federal Reserve to get us back to lows back from the 1st of July. We'll take a look at the mortgage-backed security market. Mortgage-backed securities trade as the investors purchase or drive the price up. The interest rate to the consumer comes down, so we can see that the prices are higher today, while the 10-year Treasury yield, that interest rate, shows lower. But let's check that chart out. And we can see a very similar picture. The low point in prices or the high point in rate coming back on July 15th before bouncing back and actually coming quite a bit higher just today, similar to what we saw on the 10-year Treasury, just in the reverse direction. So a positive news to start this week off. Like I said, not a lot of major news. We are expected to stay relatively steady. Inching higher could definitely improve our available interest rates to consumers. But we will be eyeing next Tuesday and Wednesday's Federal Reserve meeting for the major impacts to come out from their decision. Not so much will they cut the rate, but will they open the door to cut the rates? They usually like to project that way ahead of time. So far, only a few of the Fed members have indicated their willingness to cut rates. Both the Fed chairman and some of the top folks on the Open Market Committee have not committed to that. So likely conversations will be had, and we'll hope to see rate cuts this September. So we'll kick this week off with the positive energy in the marketplace as the heat of summer kicks ahead here. We'll get into another update next week as we get a little closer expectations on what economists think the Feds will do. Have a great week.